All right, we have 7 companies to break down in this video, all of which are set to report earnings this week. So we're going to break down the charts, of course. Don't worry, guys. We'll break down the charts, and we're going to go over EPS estimates, revenue estimates, and later in the video, if we have time, we'll break down the indexes, which, guys, we've been seeing some selling recently. So jam-packed video. Hit the like button. Feel free to subscribe, and you might as well get up to 15 stocks for a moo, each up to $2,000. I'm telling you guys, this is the best promo right now by far. Just use that link down below or go to stocksurfest.com/moo, and I'll also have a QR code right here. Make sure to get your stocks. The clock's ticking, and with that being said, let's dive right into the video. So like I said, guys, we have 7 companies to break down in this video, and we're heading into this week after we had a pretty rough Friday. Just to quickly glance over these indexes, we're not going to break them down necessarily, but to just see what they did on Friday, the Dow went down 0.5%, the S&P went down 0.7% pretty much, NASDAQ went down over 1%, and we had the Russell up 0.4%, but that's after it had almost, I believe, a 2% red day on Friday. So we've seen a lot of selling over these past couple of days, but obviously, we're still seeing an uptrend on all these indexes. Don't get it twisted, guys, but we have been seeing some selling in the very short term, right? Which I'm sure you guys are aware of. So I'm interested to see how that's going to play out heading into this brand new week. And again, if we have time later in the video, maybe we'll dive deeper into these indexes. So let's dive into these stocks. Let's get into it, guys. Let's dive into these stocks and break down the earnings estimates, EPS, revenue, the charts, all that good stuff. So number 1, we have Micron, ticker symbol MU, which is heading into this week down almost $10 from the recent highs. You guys can see back on the 8th of March, we hit almost 102, and now we're at about $93-ish per share on Micron, which actually could be opening up an opportunity potentially if they do well on earnings. As again, we're down almost $10. Maybe that could cause the stock to start rocketing back up. Potentially. It's not, guaranteed, of course. And full disclosure, I don't own any shares of Micron or any shares of any of the stocks that we're going to talk about in this video. Full disclosure, guys. But yeah, Micron's down about $8-9, almost $10, heading into earnings, which I believe are on Wednesday after the bell. Yep, Wednesday after the bell. We have Micron, and clearly, guys, we're still in an uptrend. We've pulled back down to the 180 SMA on the 4-hour chart, which is pretty interesting, like I said. So Micron's set to do EPS of negative 26 cents on average versus the loss of $1.91 from last year. So last year they lost a lot of money, guys, almost $2 per share, and now they're looking to do pretty much a quarter in the red on revenue of $5.33 billion. So I'm going to set my alert at $95 per share. Let me do this now. Mark is at or above, and who knows, since earnings are on Wednesday, maybe we get a rally before earnings or heading into earnings. I don't know. It's not guaranteed, obviously, but I'm going to set my alert just in case so we can see maybe if we start running towards that $100 level again, maybe it breaks $100. So Micron's huge for this week. We also have Nike, which I'm very interested to see how they're doing. Their stock price obviously has not been doing well. You can see we tried seeing if this inverse head and shoulders was going to play out. Clearly, it didn't. So let me actually clear the drawing set here. Essentially, guys, since the last earnings report, we've been downtrending. Looks like Nike got from, let's see, it went from 125 all the way down to $105 since the last report. That was actually right after the report came out, and we've been slowly bleeding since. Now we're down to about $99 per share. So Nike set to report earnings on the 21st of March, which is coming up here. That is on Thursday after the bell, and now we're down essentially $25 or around 20%. So now Nike stock's in a bear market heading into these earnings, which is quite interesting. And we do have a death cross. We're under the moving averages, and we're not too far off of the lows from back in September. We'll see if we do. test the lows. I'm sure we'll see some volatility after earnings. And if we see anything similar to what we saw last earnings report where we collapsed, who knows? Maybe we'll be right by those lows sooner rather than later. We'll see how it plays out, obviously, guys. But Nike's looking to do EPS of 74 cents versus 79 cents from last year on revenue of $12.28 billion. So revenue $12.3 billion pretty much on average. And again, EPS is going to be a little bit down year over year, 74 cents on average versus 79 cents from last year. So keep your eyes on Nike. I'm afraid to say we do have a descending triangle heading into earnings, which is pretty bearish overall. So we'll see if that trend does play out or if that pattern plays out. Time will tell. So the next one here, guys, is Lululemon, Lulu, which we have a wedge heading into earnings, right? Higher lows, lower highs at the same time. And now we're pretty much right at the 180 SMA on the 4-hour chart. We'll see if we do end up breaking out of there. But Lulu's at about $465 per share. Recent high was $516. So we are down now roughly 10%. So roughly in correction territory on Lululemon, and they're set to report earnings on Thursday, I believe in the morning. Thursday after the bell, we have Lulu. So they're looking to do EPS of $5 versus $4.40 from last year. So that's good. EPS will be up on average, projected year over year on revenue of $3.19 billion versus $2.77 billion from last year. That would be up 15% if they do hit that $3.19 billion. So keep your eyes on Lulu. I'll set my alert at 475 to see if we do end up breaking out of this wedge. And if we do, 500 plus potentially could be around the corner. So the next one here is FedEx. FDX is the ticker, which, guys, keep in mind, this has been slowly breaking out. We have a golden cross. We're above the moving averages. As of this past week, it looks like we're above the highs from the end of January and the end of last year, it looks like. So FedEx is gaining some steam slowly, which is good for the bulls heading into these earnings, which I believe they're on Thursday. Let me double check, though. Yeah, Thursday after the bell. So FedEx, they're looking to do $3.53 EPS versus $3.41 from last year on revenue of $22.05 billion. So a hair over $22 billion in revenue. So for me, guys, if I'm looking at the charts here, I'm looking to see if we could end up filling this gap right here. Of course, a lot comes down to earnings. Obviously, it's earnings week. So if they completely just have terrible earnings, this might not happen. But if they surprise, guidance is strong. Maybe the trend continues, which, again, we've been reversing. We have a golden cross above the moving averages, all that good stuff. If we're able to get out of 255, preferably 260, FDX could be making a move towards this 275 level, which you guys can see is right around here. 275, that's where we were a couple of months ago. And actually, let me get my alert a bit lower, maybe at about 258, something like that. Let me set a new one. Mark is at or above. Come on, there we go. Mark is at or above $258 per share. So we'll see how it plays out, guys. FDX, I'm telling you, I'm looking at it here as we are slowly reversing. And again, full disclosure, I don't have any shares of any of these stocks, but who knows? Maybe as a trade, I'll be looking at it, or I am looking at it this week. Maybe I'll execute this trade here. So Five Below is another one that I'm watching. We're above the moving averages on this one, and it kind of looks a little overbought. I'm not going to lie. A little overbought heading into earnings. We're looking a bit toppy here at 210, 215-ish, right? 215, that was the high earlier in January. And now looks like earlier in March, about 10 days ago, we hit 211. We're topping a bit there. So we'll see how this thing plays out. We have earnings on the 20th, which is on Wednesday after the bell, guys. So we have Five Below looking to do EPS of, let's see, 378 versus 307 from last year on revenue of 1.35 billion versus 1.12 billion from last year, up 20%. So their revenue is projected to be up 20%, but is that already priced in? Is, their guidance, are they going to report great numbers to the point where it brings the stock through this resistance? Time will tell. Time will tell. But now that I'm looking at it, hold on a second. We have a cup and handle here now that I'm seeing this. You guys see that, right? Cup and handle. And again, it all comes down to that 210, 215 range, which if I just set my alerts, you guys can see one at 210, and I'll do another one at 215. You guys can just see how this has been a big sticking point, not only over the past couple of months in 2024, but also back in August, July of last year, right? We struggled to break above 210, then we dumped to 145. So let's see how this plays out. My alerts are set, 210, 215 on Five Below. Chewy is another one that I'm watching, CHWY, which is up or went up 0.9% on Friday, but it's down massively. And their growth, guys, has pretty much been squashed, which is not good, obviously. EPS for Chewy, they're projected to do negative 4 cents versus 1 penny in the green from last year, so their EPS is going red. That's not good. Year over year, that's not looking so good. Revenue, $2.77 billion versus $2.71 billion for a growth company, guys. They did 2.71 last year. That's only up 2.4% projected for a growth company. Yeah, not so much growth, right? And the stock price obviously has that priced in. No doubt about it. I mean, this thing's been squashed to the floor from $97. Think about that. Back in 2021, August 2021, so about 2.5 years ago, it was at 97. Now we're at $18, $17. So we are down 81% on Chewy stock. And this is one that I was watching for quite some time, man, and I'm glad I never actually bought any Chewy stock. I've traded it, I've gotten in and out of it, made some money on it, but as an investment, I never really considered it, but I looked at it sometimes, a couple times. But I'm glad I never put some money into it because honestly, I'd be down big time at this point, right? I'd be in the red. But, who knows? Maybe this now could be the bottom for all we know. I have no idea. It has been consolidating after all for a good, 6 months at this point? Geez, from, September all the way to now, it's been flat at about $17-ish per share. So we'll see how that plays out. And the last one for the video, guys, which by the way, if you stuck till the end, I appreciate you all for sticking till the end, for tuning in, for, smashing the like button, subscribing, all that. You guys are awesome. For those that stuck till the end, the last stock here is GIS. Not the most exciting company, but General Mills is one worth watching, which kind of looks similar on the charts here to Chewy in the sense that it got beaten down aggressively in 2023, more in the middle of the year. And now it's been consolidating for a couple of months. So we have GIS reporting earnings on what day are they? They're on Wednesday morning, and I forgot. Did I say Chewy what day they are? I think they're on Thursday. Let me double. Actually, no, Wednesday. Yeah, Wednesday after the bell. So Chewy's Wednesday after the bell. GIS is Wednesday in the morning. And again, both of these are pretty flat over the past couple of months. So we have EPS, the estimate for GIS at $1.04 versus 97 cents from last year on revenue of almost $5 billion. The average estimate is $4.96 billion for General Mills. So I'm going to set my alert at $68 because I'm sure we could agree, looking at this chart here, if GIS starts pushing 68 back into the 70s, man, we could start taking off from there. Time will tell. We'll see. Nothing's guaranteed. Of course, I'm not a financial advisor. I'm not telling you guys what to do. Please do your own research. And yeah, with that being said, hit the like button. Feel free to subscribe. And before you click off, don't forget to get up to 15 stocks from Moo. I'm telling you guys, each of those could be valued up to $2,000. Just use that link down below, or simply go to stocksurfest.com/Moomoo, or use the QR code right here. Once you open up your account and fund it with at least $100, you get 5 stocks, and fund your account with at least $1,000, you get 10 more stocks, totaling 15 stocks. And again, each of those could be valued up to $2,000, and the clock's ticking, guys. Get on it. Use that link down below. And with that being said, cheers. I'll catch you all in the next video.